Hey guys, welcome back to another video. My name is Max and I want to talk about private rentals and I want to talk about Turo in comparison. I've talked to a lot of hosts. I've talked to hosts with really big accounts, medium accounts, just getting started, and there's a lot of misunderstanding when it comes to private. People really like Turo, including us. We really like how Turo promotes the cars, helps you get out there, takes care of a lot of the back end work. So truly there's very little for you to do other than getting the car ready and giving it to the guests and monitoring your prices and photos and stuff like that. But today I want to talk about the benefits of possibly going private. And when I think about private, I don't think it's for everybody. I think at a certain size and at a certain level it makes sense. Like if you're just getting started, you have one or two cars, maybe it doesn't make sense because when you're doing private, maybe there's a little bit more marketing, there's a little bit more to it that you have to have for it to make sense. So let's get started with the numbers. I want to talk about your daily rate and then what Turo charges. So essentially, you have your daily rate. Let's say that's $50 a day. Turo charges that same rate, that $50 a day, on top of your $50 a day. So the guest is paying $100 a day and you're only getting paid $50. And then you're paying the 10% to Turo for the insurance, or maybe you have a 60-40 split, whatever your split is. We do 90-10. So when you just think about that, it's kind of like, whoa, there's another 100% revenue I'm missing out on. If I'm making $2,000 a day on a minivan, maybe I could be making $2,000 a month, maybe I could be making $4,000 a month. Same applies for everything. So if I'm generating, let's say $25,000 on Turo a month, I could be generating $50,000 on private. And then not only that, there's extras. So there is like a young driver fee. You can possibly sell insurance if you do private, so you can make money on that side. Additional driver. You can control your mileage. You can control how much you charge per mile. You can control how much you charge per gas. So instead of just getting $10 convenience fee, maybe you can charge 2 times as much for gas. So there's tons of different tiny little things that are outside of just the daily rate. So there's huge opportunity. So I'll just give you a quick number. In March of this year, we did $37,000 with Turo and Private combined. We did about $18,000 on each, roughly. And I did the math on if we were to do fully private based on the numbers we did for that month, and we would have done about $54,000 in revenue, which is huge. And if you take that for every single month you do car rentals, I mean, it's staggering. Again, Turo does a really great job on marketing your product. They take care of a lot of the back end, so it's truly very hassle-free compared to what it could be. But what are you missing out on? So the next thing I want to talk about is extras. I kind of touched on it a little bit, but really, what are you missing out on? How many young drivers are renting your cars? Each one of those, Turo's charging $30 a day. Okay, so what's that worth? And then another thing is additional drivers. Unless it's like a spouse or a direct family member, you could be charging daily for that as well. Another example of extras is mileage, right? So if you go over on mileage, for Turo, you can make, it's based on like the daily rate and how much they go over, that's how much you can charge. But when you do private, you can control that. So if you want to charge a standard like 50, 75 cents a mile, maybe it's a really expensive, nice car, and you want to charge $3 to $5 a mile, you can control that. But when you're on Turo, they have the power over that. They decide what you can do. Another thing that you have power over is loss of rental and diminished value. So if your car gets in an accident with Turo, depending on what plan you're on, I know on 60-40 they provide this, but when you're on anything past that, they don't, and that is loss of rental. So if my car gets in an accident, and let's say that it was gone for like 10 days getting fixed. Well, that's 10 days I couldn't rent it out, and I couldn't make any money. If you're doing the 60-40, they're going to give you money based on the amount of days that it was gone. But if you're not, if you're on any other plan, you don't have that opportunity. So for private, we do have that opportunity because we can charge the insurance company, and that's usually who it goes through. So if somebody, wrecks our car, and this just happened actually in February. Somebody wrecks our car, and somebody did wreck our car, is gone for about 2 weeks, and we're able to charge the daily rate for every single day that it's gone, which was great because then we were able to recoup the revenue that we lost from it being fixed, or from it being gone and then being fixed. Another thing that we were able to get is diminished value. So when a car gets in an accident, it shows on the Carfax and the reports, and so that takes the value down. Typically, people don't even want a car that's been in an accident because they're afraid that there's still leftover problems. So by being able to charge for the insurance company, you're able to recoup a little bit of that. Because again, if you're going to have an accident on your report, it's going to be worth less than if it was clean, no accidents, nothing. So keep that in mind. The next thing that the difference is the process. And this is part of what everybody is kind of worried about, but it's really simple. There's a couple things that you need from the guest. First is you need their insurance. So for us, if somebody's going to rent a car, they need to have full coverage. Whether we sell them full coverage or they have it themselves, they need to have full coverage when they're renting a car. If they have liability, we'll sell them full coverage. If they have full coverage, they can buy ours on top so that we can use ours. And if they have no insurance at all, we're not able to rent. Because the way our insurance works for selling is we can't like create the liability and then give them full coverage. We can't go from no insurance to insurance. They have to have at least liability for us to be able to sell full coverage. That's just how ours works. I'm sure others work differently. So we need insurance, need full coverage when they leave the lot. The second thing that we have is a rental contract, which is simple. You can either get it from your insurance company, which is where we got it, and then modified it, or you can find one online, or I'm sure there's other hosts that have them. But essentially it is getting all the information from the renter, their name, their address, their billing address, which should be the same typically, their insurance information, if there's an additional driver, their information, the type of vehicle, the condition that it's in, and then all the terms and condition, which is, only this many miles. If you keep it for this many days past paying, we'll convert it to a stolen car with a certain code in there. You got to have conversion stuff in there. But you'll find something standard. Another part of the process is making sure that they have a valid driver's license and that it's not expired. I guess back to the insurance. When we get the insurance card, we always call to check. Because there's a couple times where somebody gave me their insurance card, I checked it, I'm like, okay, it looks good, it wasn't expired or anything, and then I called after, because I was like, oh, I should call, and they told me that it's expired, that the person stopped paying on it. So even if somebody has an insurance card, you still need a call to verify that they actually do have insurance, because the card sometimes can be expired even though it says it's not. So if people don't pay, it's not valid anymore. So again, you need their valid driver's license, you need proof of insurance, you need them to be, for us, they need to be over 21 years old. We can't rent to people that are 16 or 18. They have to be 21 for our insurance. And then the big question that people ask is, okay, well, how does insurance work? And since we only allow people to leave our lot with full coverage, it's great because essentially they hold all of the risk. I mean, if they get in an accident, it's all on them. And if their insurance for some reason doesn't cover everything, our insurance is going to cover the rest. So our insurance is for, it's kind of like a backup. So we have GMI, and that's what they do. So we're covered. We're covered. Another thing that people wonder is they're really worried about how to, well, I guess not worried, they're curious on how to do the marketing, how to get the customers coming in. And there's tons of different ways you can do it. You can run ads on Google, Facebook. You should always have a Google My Business. That's just like a baseline where people can look up your company and have it. Of course, you need to have an LLC. You don't have to have an LLC for that, but you should. There's tons of different things you should be getting to get this thing started, like an LLC, a separate bank account, Google My Business, even if you're just on Turo, so then you can have a website on there, and then people, even if a couple people view it every month, for them to be directed to Turo so they can book cars. The more people that see your cars, the more they're going to get booked. The last thing, or another way that you can market, is through affiliate marketing, like going to hotels or going to shops or going to dealerships and talking with their service managers or GMs and saying, hey, we want to start a partnership where we would love to give your customers rentals at a discounted rate. And then that, of course, helps you out because you get rentals, and it helps them out because they offer something that they normally wouldn't. Because a lot of hotels and a lot of places like that just say, oh, yeah, you have to find something. We don't have any recommendations. So it's definitely a good relationship to start. Those are really the biggest differences. There's a lot more money to be made You have to do a little bit of your own work, as in the contracts, vetting the customers, make sure they actually have what you need. And then, of course, everything else kind of works on its own after you have the marketing as well. So a couple little things you have to worry about, but past that, the revenue is definitely worth it, at least from what we've seen so far. So I hope you learned something from this video. If you want to see something in future videos, just comment it, and I look forward to seeing you in the next one.